Hey all, welcome back to the GMT channel. Today we'll discuss about the hedge fund and its general entry. So most of the part in the fund administration or fund accounting or maybe any job title. So there are some accounting system that are have the dual entry system. So if you know the general entry, you can process, you can identify the breaks and you can resolve. So there are many accounting platform, but the main part of all the accounting platform is general entry and how it get passed and how it affect on the uh, other part, like what you are using, like cash flow statement, ledger account, appraisal report, balance report, custodian report, or maybe the if you go in the part of the nav calculation, so we required profit and loss statement, or we required a balance sheet, and then we required before that we required ledgers and ledger, trial balance, and all the general entries. So it is a flow that helps to generate the nav with a start with the general entry, then goes to ledgers, and then goes to trading, profit and loss, balance sheet. And if some company was a cash flow statement, so we have investing, financing statement as well. So the base of all the accounting system is the general entry. So today we'll discuss about the most important part or most important general entries in the hedge fund. So stay tuned with this general entry part of hedge fund. So if you ever wonder how hedge fund track their millions means or billions of dollar, what if I told you understand in the simple general entry could unlock the secret of a hedge fund accounting. In this video we are breaking down all the hedge fund transaction general entries in the easiest way possible with the example as well. Whether you are a student or financial professional or just someone curious about the hedge fund, this is a perfect video for you. Okay, so stay with me till the end because I will share the career insight, how this knowledge can land your job into investment banking, fund accounting, and the private equity. So basically we'll start with the hedge fund. What is hedge fund? So we'll not take much time on hedge fund, just I want to explain you the what is hedge fund, and then I move to the general entry part. So if you know about the hedge fund, it is a combination of the strategies, a combination of a various investment instrument, or maybe the some fund manager inclusion into this. So this is general way of this, and the pooling of the money from the many investor invest into one fund are the common meaning for the hedge fund, private equity, and the mutual fund. So these are the common thing that I explain you, the same as written in the slide as well. But the hedge fund is more advanced than the mutual fund because it have the strategy like leverage. Means taking the leverage example means taking a loan on this particular part. Derivative, they include the derivative platform also, like maybe the option futures or maybe the swap as well. So they invest into swap as well. Sometimes they use the short selling as well, like cover buy, cover sale. You heard about this term. So they use the terms like short selling, but in our accounting system you heard as a cover buy and cover sale. So they use this part as well. So like mutual fund, hedge fund have some target high network investor. So the mutual fund, if you heard, we invest like individual can invest, but in hedge fund most of the people invest who have the high network value. So they in India we invest with our SIP in mutual fund with 1,000, 2,000, 5,000, 10,000 max as a SIP, or lump sum 1 lakh, 5 lakh, maybe 10 lakh in lump sum. But this hedge fund we cannot direct invest because they required 5 crore, more than 5 crore as your net asset value, and maybe the aggregated investor means who have the large network of their individual, so who can invest into the hedge fund. Okay, so just to give the example of a hedge fund, so one is the company with the Bridgewater Associate is the largest hedge fund used in the global macroeconomic strategy to invest into different asset class worldwide. It employ risk plenty strategy to balance portfolio across the stock, bond, and commodity as well. So they invest into the multiple thing. They do the strategy between them. Strategy are decided by the fund manager according to their research, and there are some research team are as well who give the indication to the fund manager, and this time we can invest on this part as well. So I give the example of a Bridgewater is the largest hedge fund in the market as a global 10. Okay, so how the hedge funds are the work? So basically the hedge fund work on the basis of a investor contribution capital, means who have most of the high network individual gives their money into the hedge fund group. So investor contribution, fund manager deploy into the investment, means the stock, bond, and derivatives. Profit and loss are realized from the investment or unrealized, that can be calculated. So do not worry about the term that I am explaining now. I will explain you detail in the Excel file as well. Just I am giving the overview of a hedge fund. Fees are deducted like management or maybe performance. Investor redeem capital when they need it. So this is a cycle that I explain you. Capital start with deploy of the fund into stock, then they realize or unrealize their whatever they invest, means they are selling or maybe they're skipping. If they sell, realize means the profit will be gain or loss, means is come under realize. If not realize means stock did not sold, still they are holding the position in the portfolio, is come under unrealized. So fees are deducted. So to manage all this thing they have to pay some fees, maybe the management, performance, admin, maybe the XYZ fees, audit fees, something. They have many fees as well. They have application fees as well. So fees should be there. And after the firm perform well, there will be redemption happen. Through the redemption and subscription will be happen when the fund give the money. Okay. So same part we have prepared the general entry how it will work. Okay. So to give this life cycle or flow chart of the real world example, a hedge fund manager receive 100 million from the investor and buy the tech stocks or sell all the futures and invest into a distressed debt over 1 year, and he generate 15% return after entering management fees and performance fee. An investor receives the fees. So whatever he invests, 15% as a return, same has goes to the investor who has invested. So there are the common there are some common hedge fund transaction. So it is a just what I explain you, the same the transaction which hedge fund do. So one is a capital contribution, means the investor who invest into the fund like HNI that I have discussed before. So HNI will give the money to the fund, and the fund will invest into the security. The same here, the first step is contribution of a fund comes to the investor. Same fund, the fund manager are there, or maybe the research team will be there. They research on the various market, maybe the not unlike the particular domestic market, they invest into multiple market or multiple currencies, and they know about the various policies. They know about the various tax redemption where they invest, so we get tax benefit as well. So accordingly they will invest. The second step is investing. So after they invest a particular stock, so they will get a dividend. If they invest into the bond, they will get an interest. Like this the income will generate on the investing. And if they want to sell, if their target reach, they sell the thing and they earn the profit, so it come under realized gain. If they want to book the loss, so it come under realized realized losses as well. And unrealized loss and gain means still holding the position but did not sell. So this is how the cycle of a hedge fund work. This is just overview I have given on the hedge fund. So in middle the withdrawal will after this loss and gain, there will be the fee part will be coming, there will be the withdrawal will be coming, we know as a redemption. So these are the main four step. That two step I added on my side is after gain and loss, management fee or other charges will be given, and sixth step is withdrawal of the fund. So this is how the transaction of a hedge fund work. So now the most important part is how the general entry work on this part. So we'll discuss on this part. Okay, so this is a general entry of a capital contribution by the investor. So when the capital contribute by the investor at a first time into the fund. So for example, I will give one example. Like for example, give an example. There is a ABC Corp Limited is the firm name, or we can say the hedge fund group. Okay, hedge fund group. Okay, and there are some investor. We can give name as X, Y, and Z. Okay, so this is a total valuation of 150 million. 150 million. Okay, so 50 million is invested by the X, 50 million invested by the Y, and 50 million invested by the Z. Okay, accordingly it will work. So same here, when the first time this XYZ give money to the ABC Corp, so that time what entry should be recorded? So recorded as a equity. Example, investor contribute 10 lakh dollar here. So if you take example of this 1 lakh dollar with our example, so bank account debit to the 10 lakh dollar and credit to the partner capital account to the 10 lakh dollar. So this is the first entry when the fund goes from the investor to the firm account like ABC Corp Limited. So this is the general entry for first. Now moving to the second general entry where this fund are received to the bank account of a firm ABC Corp here, and ABC Corp want to invest into the some securities, maybe the stock or bond. So how they will invest? So for example, here we take example, they want to invest $5 lakh into the stock as a stock. So what will be the general entry? So investment in security account debit to the bank and cash account credit. So this will be the general entry. Same here for the bond, it will copy. Same here for the commodities and other thing will be copied. So according to the platform they have certain names, so but the common general entry are those only. So now moving to the next general entry, we are designed this general entry on the flow. First, capital will be received to the firm, then firm will invest into security. Now firm, if they invest into security, they will earn the income or dividend. So this is the third entry. When the receive dividend or interest, for example dividend received, so bank account debit to the they receive the $5,000 dividend to the credit to the investor income of 5 loan. So in terms of if it is an interest entry, so you write a, instead of a dividend income credit to $5,000, you can write a income interest income received as a credit. So like that, vice versa, you can change your general entry as well. Moving to the next entry is the realized gain and loss. When for example you invested into some security and you like that it meet our target or meet our stop loss, like we did not if loss also there, but some target will be there of loss as well. So they want to book their what they have invest, so it's come under the realized gain and loss on sale. So here the scenario is record profit or loss. So example, stock brought for 50 thousand sold at 60, means here the $10,000 is a directly profit we can see in this example. So what will the general entry for that? So bank account debit of 60,000, because the 60,000 when they sell it to market, so 60,000 receive in their bank account, that's why it get debit. Investment in security, how much they invest is initial investment is 50,000 and realized gain on investment is 10,000. So for example, in this case, if they get a loss of 10,000, instead of 50,000 they invested and they get a 40,000, so general entry get reversed. Okay, so what will be the general entry for that? So bank account debit goes to the 40,000, realized gain, realized loss on investment goes to 10,000 debit, and the credit will be the investment in security 50,000. So this will be the entry. So accordingly, vice versa, you can change your general entry, but if you know one entry, so you can make a different entry according to that part. So anyhow, I tell you of a loss entry also. So now moving to the unrealized gain and loss. Sometimes if you invest into the some particular product apart from the stock and bond, which give the daily M2M, is mark to market valuation. So mark to market valuation, if you see, if you invest in some futures, if you invest in option, if you invest in some ETF, you invest in some index, your fund invested this all thing into the different product. So according to the market of a daily, they invest into multiple country, multiple currency. So according to the market, every day their valuation will change. Like for example, if they buy any options sorry, if they buy any option at 100 rupees at a first buy, and tomorrow it changed to 120, so you have to mark this 20,000 as a income unrealized gain on this option. So like this, you have to not do individual, you get a report of a unrealized through the accounting system is now very automated. You need to not calculate each and every position of option, equity, option, swap, or maybe future or index. It will give the automatic reports to you that you have unrealized gain and loss for today, like this. So we are moving to this example now. Mark to market, adjust to the market value. Example, investment value increased by the 20,000. For example, all the option or maybe thing increased by the 20,000, it includes the stock and bond as well. Okay, so mostly mark to market is calculated for all the thing, but however, the mostly mark to market will impact much on the part of a option, future, and this, because stock they will not impact much. Like if 20,000 is their investment value increased by 20,000, so out of which 2,000, 3,000, 5,000 max is for the stock only, because stock does not move very fast than the options index or maybe the future. So most of this 20,000 is carry for the option, swap, and future index ETF also. So what will the general entry for that? So investment in security is 20,000, unrealized on the investment is 20,000. So this is the entry for this credit and debit side of this. Moving to the next general entry, I did not write into PPT because the PPT will go very large, but I will tell you in my Excel file. Just note a point, because this is something technical on the term of a interviews or maybe your accounting system. Okay, so this general entry is for the performance fee. Somebody wants fee. Okay, so how it get calculated, how it pass. For example, hedge fund, this is narration I am giving. Hedge fund $15,000 performance fee. You can take example of any fee here, maybe admin fee, audit fee, or maybe the management fee. You can take any example. Just I am giving the example of performance only. The performance fee expenses debit. So I write debit here. Debit to able to fund manager credit. Okay, so here will be the dollar 15,000 $50. Okay, this is how the entry will pass for the performance fee. You can include other fees as well. Same entry will be passed. Okay, moving to the other entry, just I note this point as a A, so it will be whatever, because I need to prepare another entry. Okay, this performance fee. So other entry is when the investor do the redemption. Okay, so when investor do the redemption, okay, so investor withdraw for his hedge fund, withdraw $2 lakh. Okay, so entry will be the partner capital account debit to $2 lakh to bank. So this will be the general entry for the redemption. Partner capital account debit to bank and cash account credit. So whatever the amount, it will goes. So now I am moving to PPT again. So we'll discuss the key takeaway for the hedge fund. So it is a combination of various strategy to maximize the return, or and general entry that we have discussed. Key transaction like contribution, investment, earning, fees and withdrawal we have discussed. So this is how we discuss about this part of a hedge fund. So anyhow, if you studying into finance or private equity or maybe the hedge fund accounting essential knowledge, so professional in fund accounting, investment banking, private equity use this concept daily on their accounting system. So understanding the hedge fund and the transaction is helps to calculate the NAV, fund audit and investor reporting as well. So this is a part of this. So just I give the key takeaway from this all the thing. So however, yeah, this is a if you like this all the content, please do not forget to subscribe this channel, because in going forward we will release the more video on this similar concept as well. So now that you understand about the hedge fund general entry, we already ahead of a curve. Want to dive deeper into the hedge fund and private equity? Let me know the comment what topic you like me to cover next. You can directly comment us. If this video added value in your learning, don't forget to like, subscribe for the finance content, share your friend who has leveled up their finance skill as well. And if you're looking hands up on the experience, stay tuned. I will soon be dropping practice exercise and mock interview question as well. So we are running many things on this. So in this video I will attach some videos that helps to understand about the hedge fund navs and the private equity part as well. So thank you so much for watching. Will we meet you on the next part. Thank you so much.